Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining is advancing two of the largest undeveloped gold projects in Canada. Our Springpole gold project in Ontario, which is in the final stages of its environmental assessment, and one of the most advanced projects in an EA process in Canada. And the Duparquet gold project in Quebec, where we're having some fantastic exploration
Dan,
results.
good to see you. Sorry, good to see you. Happy New Year.
Good to see you.
To you. We are going to talk today about gold market and all things gold. Gold at 2,800. That's a kind of super start to the year. What's driving that?
I think we're in a period of uncertainty. Certainly, we're hearing all here in Canada, lots of furor about tariffs and other things. I think, you're continuing to see central bank buying of gold. And I think, this is exactly an environment with macroeconomic instability that gold will shine. And I think certainly our folks south of the border are giving us a lot of optimism for the gold price continuing to go higher.
You know what you need during a high-priced gold environment? A gold mine. So,
yes, indeed.
Awfully handy. We are going to talk about a bunch of things that are going on in the market. And I think one of the things that we're noticing is a kind of shrinking field of advanced gold projects. We've seen recently O3 and then obviously Osisko as well, but they're one of a few in the last sort of 3-4 years, aren't they?
Yeah, no, that's exactly right. When we look back over the last 4 years, we can always kind of wring our hands and we and investors are asking, well, where's that M&A market? Why aren't people buying projects? I think if you look over the last 5 years, and we've got a great chart in our investor presentation showing this, it's been a very steady pace of project and company acquisition for large advanced stage gold projects in Canada. And one of the things that's important to understand is almost every project in Canada that has been acquired, that's call it 5 million ounces or more, has been acquired for a price of $500 million or more. And often, you go back to 2020, you were talking about gold prices that we thought were high at the time, but are, $800 and $900, $1,000 lower than where we are today. So advanced stage projects now, I think, have phenomenal leverage to this rising gold price.
Right, but the flip side of that is there's not that many advanced stage projects left in Canada, are there?
No, I think that's right. You look at what a lot of people don't appreciate is that we've had an unprecedented level of project build in Canada over the last 5 years. We've had 6 major gold mines built or just finishing up construction now, and a 7th with Windfall, arguably in construction, or certainly about to get there. Major projects being built. We've never had this level of capacity addition in Canada at the same time. But that's what really opens up the opportunity, that when you look at the opportunity set beyond that, it gets pretty thin. It really does. And, with our projects here, we've got 2 of the largest and certainly one of the most advanced from a permitting process and environmental assessment process at Springpole. So, there's a number of projects on this list that haven't even really started a permitting process. They may be collecting environmental assessment data, but they're a long way from pushing start on it. You got to remember, we started our environmental assessment work at Springpole, put it formally into the EA process in 2018. So, we're 7 years into what we think is going to be an 8-year process.
Okay, we're going to hit a lot of topics, because the audience for this is people coming into the metal space, intrigued by what's going on with gold price and needing to maybe understand some of the variables involved when investing. So, look, we're gonna break this down today. Let's go back to that fact that there's very few advanced stage projects left in Canada at a time when, quite frankly, the seniors, mid caps are looking out for new opportunities and trying to work out what good looks like. So, first of all, I don't think there are that many projects out there to look at. So can we just talk about maybe what some of those primary reasons for the decline? Was it regulatory? Is it exploration success? Is it finance challenges? What do you point to?
I think when you look at the projects on this list, most of these projects have been around for a long time. It's just the reality of it. They're projects that were likely discovered in the last cycle, or they are projects that have been known about for a while that may have been grown over the last 10 years to kind of reach a certain scale. But there's really only one or two projects on this list that you would call sort of new discoveries, and for them, they're still getting larger. It's great opportunities to invest, but it's a very different risk of investment when you're looking at a project that still has a lot of work left to define what the economics of a project would look like. Whereas, with ours, well-established resources, well-drilled out, well-understood geological risk, which is an important part of making a decision on whether you're going to advance a mining project. But, what all these have in common is they're in a tier 1 jurisdiction, and that's something that, certainly in some of the mid-tier and large cap companies that we're speaking to, it's becoming more and more important. I think the days of chasing assets in difficult to build mines places is coming to an end. Everyone wants advanced stage projects. And the other thing that's important to understand is that most of these mid-tier and large cap companies have been trying to buy a producing asset. So the goal was we'd like to add another pillar of production. Gold price is high. We think it's going higher. That'll give us diversification and cash flow, and then we'll be able to go and look at, taking on this development risk. But everyone wants a project that has its permits, right? No one wants to take permitting risk, and investors have kind of been steering away from that for years. But we're at a point where, the larger companies have started to realize that that's where they are going to find these projects that can produce 200,000 ounces plus. And they're going to have to take construction risk, and they're going to have to take permitting risk. So we're going to see more of that activity in the sector in projects like ours.
Well, let's take a look at the breakdown of the different types of companies that are out there for investors to get behind. Okay, I was speaking to a CEO at the end of last week, and they were saying, like, when I started with our project, we needed to demonstrate 1 million ounces. And then that became 2 million. Then became 3, became 5, and now they're hearing 8. Right, so these 8 million. It's the goalposts are changing. So that for large scale now, large scale is starting to get even larger scale, which I guess reduces or shrinks this field even further, really, doesn't it?
Well, I think that's a pipe dream to say that mining companies are only going to be interested if you have a mine that's 8 million ounces. Look around the world at how many of those exist. The answer is not many. I think what they're more concerned about is what is a production profile that is going to be, call it mid-tier or large cap. And if you're Barrick or Newmont, you've set this edict that you want these to be 500,000 ounce a year potential producers. The reality is there's very, very few of those in the world. So great, they can fight them out at extraordinary values to try and get those. Or they're going to try and build them in places like Pakistan. Fantastic. But for the rest of the gold world, what they're looking for are 150,000 ounce a year plus meaningful producing mines in tier 1 jurisdictions in good places with exploration potential where they think that 200,000 ounces a year they'll be able to produce over 15 or 20 years, not the standard 10 years that the industry usually builds projects on. And that's where that 5 million ounce resource really kind of checks that box. Let's say that, a resource to reserve conversion, let's say it's 4 million ounces you're going to produce. Out of that 4 million ounces, you recover, 3.5. Well, that 3.5 over a 12-year mine life gives you that 300,000 ounces a year-ish. And then you have opportunity to extend that mine life. And that's really how we talk about our Springpole project.
I guess you're in an interesting place in that sense. Okay, 5 million ounces, we'll go with that. You looked at a lot of companies last year that kind of struggled to access capital. And it was expensive capital when they did get at it. You had a little bit of optionality there in terms of pursuing this business model, which I guess is set up a potential for a large-scale gold project, which might be attractive to someone else with a big balance sheet, right? So can you just remind us in terms of how much money you've been able to, access in the non-equity raising kind of way once we get through the process?
It's been, over the last 5 years, it's been more than $60 million that we've been able to sell non-core assets. We created some royalties on our asset portfolio. We brought in partners to spend money on some of those projects. We got shares in some of those companies. We got cash payments, and we took back royalties, which we sold. So, we've tried to be as efficient we can with the capital structure and minimize the amount of dilution. But, we've still spent more than $100 million over the last 5 years in advancing these projects and or acquiring the balance of Duparquet, which we're quite happy to have done because, we think that the Duparquet project is one that's trending in terms of size, very much to the left side of this chart. So, I think it's been important that we've had other non-raising equity avenues to be able to continue to advance the projects. But it's been a really difficult environment, and that's part of the reason why there's not a long list of projects that are as advanced as we are, because the capital availability really hasn't been there, and it hasn't been there because investors haven't really been supporting these companies in the market. They've been acquiring gold producers in the initial run-up in the gold price. And, it happens in every cycle. The first money goes to producers, and then eventually it trickles down to gold developers. We're starting to see some of that in terms of access to capital. But interestingly, we see it in real waves when we see other companies get acquired. So when Osisko got acquired in August of last year with the Goldfields deal, there was a significant portion of that $2 billion that was turned around and reinvested in other gold developers. And we did our financing in late September, early October. And I know that we were the beneficiary of some of that recycling. But that's what that M&A market does. It does free up capital where big companies come and buy these projects. And then investors look to redeploy that. It's a pretty simple way to make money. You sell high and you buy low.
Yeah, it's so good it'll catch on. With just looking at some of the other kind of variables out there, obviously it takes a lot longer to go from discovery through to production. It's almost doubled in the last sort of 20 years or so. And time is money. We know that. It's meant that a lot of companies, I think, I especially saw it last year, had to sort of change their business plan. They had to say, we're going to reduce the size of this project, reduce the capex. We're going to get into earlier production than we had been thinking, because those are the types of companies that are getting rewarded. Near-term producers were getting rewarded, printing money for fun, as it's saying. And this year it looks like it's going to carry on the same way. You've stuck with this plan with this dual track with both projects at 5 million ounces each and moving them through the phases. You've had the advantage of not diluting your shareholders to the tune of $60 million. It all helps. Do you think this kind of environment is sustainable for this business model of yours that you've got going on?
I think the environment that we have been in for the last, let's be honest, probably the last 14 years, kind of from when the equity markets really started rolling over in 2011 to where we are today, with maybe a couple of windows of 3 to 6 months in there where, it wasn't actively facing headwinds. But I think that market is the market that is unsustainable. I think you cannot have large projects like this continue to be valued in the market at less than the cost of, the sunk cost of development of these projects. It's, you talk about it in the copper world, which I know but the solution to low prices is low prices, right? It's similar like that. The solution to the lack of access to capital is the lack of access to capital, which just means that there are no projects that can be moved forward. And if you had an industry environment with other producers that were committing that capital, which they are going to do, and we've been saying this is coming for 6 years, and I've sounded like a broken record on this, but that is the first capital when these producers are generating so much free cash flow right now, unprecedented levels of free cash flow. That's the capital that is going to ultimately advance this development sector. But what it's going to look for are the most advanced projects, the ones that are furthest along in a permitting process, and those ultimately, I think, are the ones that will get snapped up first, either as partners coming in to, potentially fund meaningful CapEx, or as strategic investments coming into companies like First Mining Gold.
Okay, so given this kind of rarefied air that you occupy with Springpole and Duparquet, in the sense that they're one of the few remaining advanced development stage projects, certainly in North America, do you think that scarcity will drive a premium for projects like yours in the future? Is that the kind of lost opportunity cost mentality, or is that purely going to be done on gold price?
No. I think, you look at the value that most of the other projects that have been acquired at, and go back over time. You can go back to when the gold price was $1,500 an ounce, go back to when it was $1,000 an ounce. These projects, over history, advanced stage projects, usually with permits, maybe not fully construction ready, but, on that path between environmental assessment approval and construction decision, have tended to sell for $100 to $200 an ounce. And we've seen that coming. 03 didn't quite make that. Osisko was in excess of 200. DeGray Mining, which, has a total ounce count that's not dissimilar to what we have in First Mining Gold, just sold for, $3.5 billion. Again, in excess of $200 an ounce for a project that didn't yet have its, full permits. So we've always said, I've been here since 2019, and the strategy really hasn't changed. It was getting these projects ready, and at the time it was mostly Springpole, but it's now, Springpole and Duparquet, to get these projects ready for when this industry is going to need them the most. And that time is here. It really is. And so with major catalysts that we have on the horizon, we've got a very clear line of sight on an environmental assessment decision that should be coming at least federally by the end of 2025. It further puts this project in that rarefied air of just having checked a bunch of boxes that a partner is going to want to look at. And so ultimately, where could this go? Listen, our dream, if you're familiar with the Australian company Gold Road, our dream is that, Springpole turns First Mining into Gold Road, which today has a $2.5 billion market cap and a 50% interest in a 300,000 ounce a year producing mine in Australia, generating hundreds of millions of dollars of free cash flow a year. So, that's when we think about the valuation and where we think this can get to, it's not far-fetched that I think we can see, serious multiples of our current share price over the next 2 or 3 years.
Right, but that's just sticking with the kind of the behavior of the acquisitors, because that's what they've got the money, right? You talk about this kind of increased permitting difficulty out there in terms of the boxes you have to tick, the time it takes, and the increasing external pressures that you face, and behind that sitting a declining lack of new discoveries. Do you think that gold producers with this abundant cash, as they seem to be building up, are going to need to be more aggressive? Because when I kind of throw in things like social pressure and jurisdictional risk to the mix, and all of the other things that can go wrong with mining, it kind of feels like they're going to need to be just that little bit more aggressive, and rather than just continuing to buy existing ounces, they're going to have to get after those new ounces. They're going to have to take the plunge and go from a developer through to producer with some of the assets.
Yeah, I think it's an inevitability that they're going to have to do that. You got to remember that a lot of these producers are sitting on mines that would have today less than 5 years of reserve life, functionally, right? So they'll hope to continue to extend that. If it's an underground mine, with some predictability to it, your costs will get higher, but you will continue to extend that. But there's a lot of mid-tier producers, particularly in Canada, that might have, 2 mines, and they all wanted to add that third leg on the stool to be able to grow, diversify the production, put them on a more solid footing, underpin the valuation that they have right now. None of them want to be single asset producers, but so far they've had the luxury of not, and they're making so much money, of not having to take on permitting risk, not having to take on construction risk. They've all been looking for that acquisition of that, next producing asset. The reality is almost every producing asset that could be for sale in Canada of size has now sold or is in the process of selling. You had a bunch of assets that Newmont has sold. And, I think they all thought they were going to buy one of those. And we now know who has won that. And if you look at, that list, there's a very long list of people who are not on the winners of acquiring those projects. So that's where, we hear it consistently, companies in that area are now needing to look more broadly. They're needing to look either at worse jurisdictions, or they're looking at smaller projects, or they're looking early stage. And so I think on the balance of risk reward, if you have your opportunity to put money into the ground to, advance a substantial portion of a big project in Canada with a district scale exploration package around it. And it's, by the way, one of maybe 3 projects on this list that can be built between now and 2030, maybe. Again, in an industry that's piling up cash and depleting reserves and resources, the imperative to transact is there. It's right around the corner. And I think, we're going to be looking at the valuation of all of these companies when, there's a bunch of these that are trading at, less than $10 an ounce. And we're going to be kicking ourselves that we didn't accumulate more optionality when it was so cheap. And this picture was so clear that ultimately these projects, if they can get those approvals, are going to be worth 5 to 10 to 20x this amount.
Okay, well let's dig into some of that, okay? Because risk management is a big part of the role of the CEO and the board of the company. We've talked in the past about certain jurisdictions are more desirable than others. Canada, Australia, US, etc. And it's easy to kind of point to the Malis where both Barrick and Resolute have basically had it handed to them by the government, the coups in Niger and the rest of it. But it's not that easy in Canada, Australia, and US either, right? So let's start with a bit of detail on permitting, because is the permitting process the same for everyone, or is everyone likely to see the same outcome if they get into that process?
The short answer is no. It depends on where you are in Canada. There are different provincial jurisdiction regulations. They're determining whether or not you need to go through a federal environmental assessment and whether the federal government will delegate that assessment to a province. It's not the same in every province that you go through. We, rightly or wrongly, have been the people who have just put our heads down and gone through the most difficult process, which is a combined federal and provincial environmental assessment. And so there's a lot of people who are sort of trying to go on the margins of that, and successfully, where they have the federal government that's basically agreed to be substituted. That's certainly the case for Skeena. I think Troilus is largely doing something similar, where the primary permitting authority is Quebec. So yeah, it's not the same process, but what you can say is the process takes a lot of time, no matter which way you're going through it, right? And ours took more time because, if we were well-funded all the way through. We probably could have done some things a bit more quickly, particularly in the early stages of the project. But, you know, there's no flipping the switch today to put a project in and getting through that process right now in less than 5 years. Unless it's a smaller project, in which case, maybe. And so a smaller, higher grade project with less surface disturbance, you might you might permit more quickly. But yeah, but it's still, you know, the challenge is the cost. The challenge is, you know, the burden of going through that process. But the benefit when you've gone through that process is that you have a permitted project in Canada, which is a much different proposition than what you would have in, you know, Niger or Mali, for example.
It's a real bottleneck for sure, and the time frame and the cost of that times money, we keep saying it could be prohibitive to some. But are majors materials, are they likely to want to ever enter at a stage where permits are not in place?
Yeah, I mean, you got to look. Windfall was still waiting for its environmental assessment approvals, I think. You know, it was a long way substantially de-risked, but, you know, that was half of that project was acquired for $2.2 billion, you know, less than 6 months ago. You look at a lot of those acquisitions, certainly, you know, they had the approvals in place, I guess, when Greenstone got bought by Equinox and Orion. They all want it to be closer, for sure, and that's something we've consistently heard over the last 6 years is, well, you're in the permitting process, you know, keep us posted on how it's going. Let us know as you get closer. I think there's more appetite to take on the last bit of that risk today than there was 2 or 3 years ago, because again, 2 or 3 years ago, you had the benefit of a lot of projects that were, you know, in construction. If you wanted to buy a project in 2020, you know, you had kind of 5 to choose from that were basically permitted and going into construction. Those are now all built, right? And what you're left with is, you know, things that are at varying stages of that permitting process. And again, there's a number of projects on here that are, you know, really, for all intents and purposes, have not even really started a permitting process, or maybe, you know, doing some data collection, but it's an easy 5 years away.
So how does this work, and more importantly, how do I, as an investor, play this? Because you're saying a lot of these projects are, you know, of a similar profile, we'll say. It's sorry to be so, you know, generic and broad sweeping there, but they're, to the average Joe, they're kind of broadly similar, right? So they're saying the same things, but they're all at different phases of that development, right? So, and we appreciate there's lots of variables that you need to kind of, but I just want to kind of, just in my head, trying to understand the buying behavior of a major or a material, where if most of them would prefer to have it permitting in place because it says that they've got a better sense of the timeline, they can just focus on the technical rather than things out of their control. Is it unlikely, therefore, that you know, people in this sort of taxi rank of companies, this queue, can overtake each other? So do you have a sense of, you know, do you think that, oh, I know I'm getting nearer to the front of the queue for, you know, the next kind of potential acquisition here with either of the projects? How do you do that?
I don't, it's not a perfect correlation between where you are in the permitting process and when, you know, potentially could get acquired. I mean, you look at Great Bear and they bought that, you know, pre-resource.
That was unusual on so many levels, right?
It was, and you know, remarkable deposit, and it's great. We follow it closely because it's about 100 kilometers from Springpole. So, you know, but I think with the others, yeah, as you get within that, you know, call it within a year of that EA approval, I think it's just incumbent on investors, you know, to really do the homework and to spend some time trying to understand exactly what the company is telling them about the process, and try and have the company really clearly articulate where they are in the process and how much time they think it is going to take. The one thing I can tell you is we have a very clearly defined process from where we are to the environmental assessment decision that we're targeting being made federally by the end of this year. So and that's something that even as someone who's in the business, I sometimes ask the questions or look at investor materials which is usually one slide in someone's deck, right? Like, people don't often dwell on, here's in detail where we are in the permitting process. But it's, I think you have to ask the question and really try and get that understanding about the range of outcomes and, what is that process? Remembering that, the process changed in Canada in 2019 and did not change for the better. It became a lot more complicated. So, luckily we're grandfathered in. We submitted our project in 2018. So, there's been many large mine permits granted under the SIA 2012 process. So with all that said, I think, it's as soon as investors can get that line of sight, remembering that these permitting processes by and large are public, right? So for us, there will be a package that's going to be published in the next week or two from the federal government that has all of their comments and, questions on the project. And so we will respond to that. As we are responding to that, the clock stops on their permitting timeframe. But, the federal permitting clock on Springpole today has about 247 days left on it, I think, if my calculation is correct. So, it's really, I don't think there's an easy way to really understand. I think you just have to be, asking management teams questions and then holding them accountable for the answers that they're giving you on, what is the process to hit these milestones and the timing.
Okay, so you referenced earlier saying advanced permitted projects in Canada valued at sort of $500 million plus, right? That sort of number. You're 150 million market cap today. Is it as simple as when this permit gets over the line, you would expect to see that significant step change, or are there things that people should be looking at in terms of understanding how the project's advancing on a quarter by quarter basis between now and then that you think also should be valued?
Yeah, I don't think you need to wait to the approval to have a decent sense of the direction that it's going. So, again, if you really want to dig into it, it's a public process. You can read and interpret the comments that we are getting from regulators. And, I think that's going to be helpful. It's certainly, there's a lot of work still to be done here, and I'm not saying that, we're 100% getting our environmental assessment approval. There's still a lot of work that needs to be done. There is a process that this project needs to go through. But, there's a lot of information that people can look at to kind of, to form a view, I think.
Okay. So I guess the problem that the potential acquisitors or JV partners, so there's lots of ways that you could come at this in terms of with the balance sheet in front of you, is they're trying to solve for the problem of replacing reserves which are being depleted today, because buying existing ounces is a kind of short-term fix, right?
Yeah, I mean, the real question is, are you replacing reserves or are you trying to replace production? Because those are two very different equations that one needs to solve for. So if you're just replacing reserves, you acquire a project, like one of the ones on this list, and it's going to be an immediate and massive bump to your reserves, which can give, you as the producing company, can give your investors some comfort that, we've got a longevity of a business here. We're not, just mining down, pretty soon going to be down to a one mine company with a 10-year mine life, and digging yourself out of that hole is more difficult for sure. So I think you can, they can replace reserves or acquire reserves. Listen, it would be impossible for them through their own exploration, unless it's right beside an existing mine, to develop a project for less than they can acquire these projects for today. And it's not just us. I think you look across the board and look at the sunk cost into these projects. For our projects, it's probably somewhere between $350 and $400 million of capital that was spent by us and our predecessors in advancing these projects to where they are. And starting today, that's what it is going to cost for someone with a new discovery to advance a project to a permitted stage in Canada, in where our projects are. So, I think that to me says, even more of an imperative. I'm thankful, to be honest, that we're not seeing really aggressive behavior right now, because never used to really keep me up at night, but when gold went over $2,200, $2,300, it does keep me up a little bit at night now that we're a little bit vulnerable. Everyone on this list is vulnerable to an opportunistic takeover. Just because the prices are so cheap, someone could pay, a big headline premium and essentially get these assets for a great bargain. But hasn't happened yet. I don't think it's going to happen anytime soon, but you got to kind of be ready for it.
Okay, and where do you think you are on this taxi rank that I described earlier?
I think with Springpole, we are the next project to get environmental assessment approval, certainly federally. I think there's one or two contenders that could be, reasonably close to that, but I don't understand their processes completely. But I think there's maybe 3 on this list that could get an approval, and permits to be able to put a shovel in the ground before 2030. And Springpole is certainly one of them. I think there is potentially a path to expedite that at Duparquet, which we've been doing some work on as well. But really, for us at Springpole, that's where for projects of size that can produce in the ounce profile that we think Springpole is going to be able to, it is a pretty unique asset here. And, I think as we hit our milestones here through the course of this year and next, that value is going to surface. And we've seen it in other companies, right? If everything, we had a long list of companies that got towards those key approvals and didn't see their share price move, I'd be a little more concerned. But, look at Perpetual Resources and its share price over the last, 12 to 18 months. It's up sort of 4 to 5x. And just at some point, there is a tipping point where people believe that you are going to get your permits. That's a project in the U.S. that's been considerably longer than we have been in a permitting process. And you hit a tipping point where people believed you were going to get to the finish line. And you saw that share price start moving, pretty quickly.
So buy now, be patient.
Well, and you don't have to be that patient, right? Like I bought a lot of stock in this company in 2019. I'm 6 years into being patient, and a lot of our shareholders have been here longer than I have, and we are all immensely grateful for them and the patience that they have shown with a long-term perspective here. But I think it's all going to be worth it, and I think that time you're going to have to wait now and getting in, at prices much lower than I acquired shares in 2019, with a gold price that's more than twice as high. You're getting a pretty good deal to get in at these levels.